Hello, everybody. It's Tortoise Investing. Hope everyone's been having a fantastic week. So, gonna be doing things a little bit different on the channel. So, I'm gonna not do constant portfolio updates like I've been doing. Of course, we're gonna show off the portfolio at least once a week, but we're gonna talk about other things as well on those Fridays. And maybe once a month, I'll do an entire breakdown of my portfolio. Like near the end of the month, we can look through the dividends and stuff I've got and what I've been buying and selling. I think that'd be a little bit better. Also, I bought a little thingy to where I can like make fancy little thumbnails so you can be seeing my face a bit more. So I think it's kind of cool, right? Kind of cool. Anyways, guys, if you are new, please join the 244 people that have already hit that subscribe button to join me on my investment journey. And make sure to comment down below, what is your biggest holding? I am curious. I'd like to hear from you guys. I want to start blowing up these comments and getting like 15 plus likes on a video would be kind of neat because I want to grow this thing into something great, and I know I can do it. But yeah, guys, what is your biggest holding? Let me know down below. Without further ado, today's video is why I don't pay attention to those little things called PE ratios. Now, a lot of people will look at a PE ratio like Costco and just be like, oh my God, it's been in the 30s. It's garbage. It's too expensive. None like, don't like, get it away from me. Well, I think you get what you pay for. And if you buy something that's got a really low PE, and that's kind of where it's been hovering at for a while, then that's what you're going to get. You're going to get something that's going to not do so hot all the time. But if you buy some prime rib and you pay for prime rib, you're going to get prime rib results when it comes to your stocks. Now, I'm not saying that Costco's cheap right now. It's above $500. But I'm more of a price history person. Like, I look at how it's been flowing through. Yeah, if something's got an expensive PE ratio, but I know if I'm going to buy this, it's going to go up 20% in the next year. Okay. I'll pay more for something that's going to grow more. I don't mind. So my price target for Costco is anything below $4.80. I'm loading in. And I've been having some opportunities here and there. I've nibbled on some. I've got a good little bit in my portfolio. I think it makes up 8% of my total portfolio. But just to give you another example of things, like for right now, portfolio, we're up 9.63% year to date. S&P 500's up 7.99%. Stomping it. 1 year out, we are down 0.89. 1 year out, S&P 500 is down 6.01. So I'd like to think that I have something figured out here. There's a lot of these things that got some high PEs, but look, Microsoft above the 15 to 17 PE ratio. A lot of people like to keep things at. Not all people, but I know some out there. Just it's PE or die. But Microsoft, I got in the 250s. The PE ratio wasn't in the high teens. But take a look. Bam. I'm up 12.6% on it. Another one, S&P Global. Another one that's usually in the high 20s, low 30 area. S&P Global, where do you go? Right there, 5%. And we got MasterCard and Visa, very similar situations. Bam. You get what you pay for. And like if you can jump in on these bigger, higher PEs at the right time, you can come out looking like a daisy. None of this is none of this financial advice. I'm not saying go out and buy a bunch of Costco and stuff right now, but like, if you like a company, if you've done your research, and if you're just like, you know what, I see this having an amazing future ahead of it. It's got a good dividend yield. It's got good dividend growth. I like the company. Maybe don't pay as much attention to that PE ratio. especially if like if the excuse me, if the price point fits, if you are happy with what you are paying for, by all means, go for it. I've been gun shy before. Like, 'cause I used to, like, there was this formula whenever I was investing like a year ago that I would use, and it factored in the PE ratio, and then it gave you like a number, and depending on that number, how high it was how high the value, like how good a value the stock was. And I just feel like I missed out on a lot during that time, but I've learned a lot since then too. And I think I've got a great portfolio now, and I feel like I'm going to very reliably beat the S&P 500. Let's go ahead and take a look at one of my favorite little things here on Portfolio Slab. This is a breakdown percentage for percentage of my portfolio, how all my allocations are. And I mean, just take a look. This is how my portfolio would have done over the last 5 years, and this is how it would have done over the last 10 years. Like, I'm very happy with it. The reason the 10-year one only adds like a year and a little bit, I have QQQM and Vici. Vici is the big one that makes it do that. If I had QQQM in here, it would make this go down up even further because it hasn't been out that long. But I think I have a portfolio built for success, and I think it's going to do pretty well. Let's see here. Let's go to track. Go to that real quick then. I'll take a look at that another day. But yeah, guys, don't let PE ratio scare you out of things. If you like the price point, if you like the value, if you've done your research of things, you never know. But yeah, quick little look at the portfolio there, and again, I hope you join me on this little investment journey, and have a fantastic weekend. And until then, see yous.